Hi everyone, very good evening and welcome back to Crack Grade B. So today we are going to have a discussion on the finance bill that was yesterday passed. Okay, and first of all, before starting to talk about the finance bill, what is this finance bill, etc., we are going to talk about the basics first, right? So that you understand the point from the beginning that what I want to convey. So you all know that every year budget is presented in our parliament. Fine. In this budget we are talking about the proposals for the next year. That means the budget 2023 which has been presented on the 1st of Feb. At that particular time we were talking about that how our economy or how our government related proposals are going to be from the period of 1st April 2023 till 31st March 2024. Okay, now I'm going to talk about this, but before that, let's understand a few basics so that our discussion becomes a easier one and you understand that what I am trying to convey here. When government brings out the budget, government estimates that what are going to be our revenue and what is going to be our expenditure. Expenditure means different kinds of schemes that government brought into, how government is going to act on those schemes, what are the demands, what are the expenses, needs. Fine. Now after the budget there is a discussion that happens on the budget. Discussion happens in both the houses of parliament, both Rajya Sabha as well as your Lok Sabha. But we are not that much concerned about the discussions in Rajya Sabha. We are concerned about discussions that happens in Lok Sabha because it forces the government to bring out certain amendments. Now here I am going to talk about the two things. Number one is your appropriation bill. There are two bills. One is called as the finance bill and the other one we have is called the appropriation bill. First of all, your appropriation bill is passed. Now what are the contents of appropriation bill? Can someone tell me? All those who are watching, can you tell me that what are the contents of appropriation bill? What do we actually talk in it? Anyone? I'm giving you the option that you can also tell me that, ma'am, why do you are teaching it? We already know about it. Good. Swapna, so under appropriation bill, what we talk about is the demands for grants. Our ministries, there are so many ministries under government, they want grants because they have to pursue so many schemes, all these schemes that we study in the morning. Fine. So demands for grants is passed through the appropriation bill. Appropriation bill, you are taking the funds out of your consolidated fund of India, whereas finance bill talks about the taxation proposals. It aims to pass the taxation proposals as well as the other revenue generating sources that you talked about in the budget. Right? So this is the difference between finance bill and appropriation bill. Finance bill talks about how we are going to raise the taxation. It wants to give them a final end. Once finance bill is passed, it becomes the Finance Act, and whatever government has proposed in the budget, that becomes a law related to taxation proposals as well as other revenue generating sources. So we are going to study today the finance bill related amendments. Number one thing I would also like to tell you that whatever has been the budget proposals we have already discussed in our budget related session. This session is about that what have been the amendments. Amendments, ma'am, amendments kahan se aaye? So I have told you that once government presents the budget, after that there is a discussion that happens in the both houses of parliament. Some things, okay, if government has proposed something, but some members think that this is not a correct way, there should be some changes in it. So government thinks about it, and if government thinks appropriate, then they bring some changes. So means in the budget proposal, if you think that some changes needs to be made, then these amendments come in the finance bill along with the other proposals. In today's class, I am not going to discuss other proposals because we have discussed all the proposals under the budget document. Fine. We have discussed all the proposals in the budget document, but now we are going to discuss that what have been the amendments under the finance bill. Just wait for a second. Okay. Now let's have a look that what are the changes that have been introduced and what have been the amendments that are important for us to understand, right? So first of all, talking about the finance bill, this is an instrument in parliament through which union government gives effect to the financial proposals or all the financial proposals that the government has talked about in the budget. All these financial proposals, government give a final what you can say form in the form of finance bill. First Lok Sabha approves it, then Rajya Sabha approves it, and after that president signs it. This is how finance bill becomes a finance act. Correct? Currently just Lok Sabha has passed it, that's why we are calling it bill as of now. After that it will go to the Rajya Sabha. Rajya Sabha has got 14 days, and after that to the president. Okay, this finance bill is presented in the parliament immediately after the presentation of budget, because budget is not anything. In budget you are just giving the proposals. Whether those proposals are going to come in the act or not, that will be reflected in the finance bill. Once your finance bill is passed, it becomes an act, then all the proposals are going to be reflected in the respective acts. Okay, now next is finance bill relates to the proposals regarding the imposition of new taxes, modifications of existing taxes, or the abolition of the old taxes along with the few other provisions, right? So I hope that you guys are clear that what is the agenda of our today's session. Correct? We are going to talk about the amendments, important amendments that have been made in the finance bill 2023. Now have a look on it. So these are the things that I am going to cover today. Capital gain tax related changes, changes in the security transaction tax, TCS on foreign tours, tax benefits in gift city, royalty, pension system, relief in income tax. As per me, these are the most highlighted ones. They are in the news more prominently. There have been few more amendments, but that amendments are not required from your exam perspectives. We have to read all these amendments one by one. We are going to see that what have been the changes. We are also going to see that what is the meaning of these, so that we can have a holistic understanding. Now let's move to the first topic that we have is capital gain tax changes in the mutual funds. So before I start talking about it, please tell me whether you have heard about these changes or not. Have you heard about it? Have any idea about it, or you are clueless? What is the situation? At least we can say yes, no, we are not having any clue, or we are having an understanding, we have read about it. Do I assume that with this silence that you guys are not aware? Mm. So I guess that is applicable on everyone else as well. Okay, fine. You have not said anything, but if you understood the provision after I have explained it, then tell me that okay, now we are clear with the proposal. So first of all, the first change, the first important change that has been in the forefront is about capital gain tax changes in the mutual funds. Now, first we have to understand what is a mutual fund. So, mutual fund is a scheme like people like you and me who want to invest, but though we do not have such large amounts to invest, we have some small amount. So, we give to these mutual fund owners, they have professional managers over there who manage our funds. They take some amount from us, like that there are so many investors who give their amount to mutual funds. Then these mutual funds, they invest in securities further. Now let's see over here how does actual mutual fund works. I'm going to take just 1 minute in order to explain this. So there are so many investors like person A, person B, person C, right? All these have small amounts to invest. They invest in the mutual fund schemes. Now, what is the benefit in order to invest in mutual funds? Because there are professional managers. These managers, they know that in which kind of securities we should be investing that is going to give us the returns. So these professional managers, they invest in securities on the behalf of clients. On behalf of clients, they invest in securities, and finally, if any return comes from these security, whatever return comes, this goes off to the investors. Right? These are my investors. Now, in which kind of securities the professional manager can invest in? There can be so many securities, right? We have equity kind of securities, we have debt related securities, fine. We have deposits, we have bonds, we have commercial papers, we have treasury bills, we have government securities. So different kinds of securities are there. Now, if a mutual fund scheme invests in debt securities, if a mutual fund scheme invests in debt securities, then that particular mutual fund will be called as a debt mutual fund. Why? Because this mutual fund is investing its fund into the debt securities. Debt securities like debentures, right? Like bonds. These kind of debt related securities, they have a fixed tenure. They give the investor a fixed return. Suppose my company has issued debenture. So my company has said that we are going to redeem these debentures within a period of 8 years. 8 साल में आपको आपका पैसा वापस मिल जाएगा, right? And in all this while, we are going to pay you interest. This interest can be paid 6 monthly or yearly, but you will be having no control in the ownership. This is called as debt mutual funds. Now we have understood what does mutual fund means. Now we have also understood that what does debt mutual fund means. Now we are going to understand that what is the change government has brought up. But before that, one more important topic that I would like you to know is called as the concept of capital gains. So I'll explain you in this way. Suppose I am an investor, okay, and I have invested in the debt securities. Fine. So I have invested in the debt securities, let's say debenture. So what are the two kinds of return that I will be having? Number one is I am going to earn interest income. Is that right? I am going to earn interest income. And the number 2 income, the next part of income that I can have is from the capital appreciation. Capital appreciation. What is the meaning of capital appreciation? It means that the security which you have purchased for 100 rupees at the time of selling, this has now gave you 150 rupees. Is that right? Do you guys agree with me that only these two kinds of return I can have by investing in debt securities, right? Interest income as well as the capital appreciation. Now be very clear on this, that what is the treatment in case of income tax. Fine. So in income tax there is a concept called as the capital gain. What is the meaning of capital gain? I would tell you over here. So capital gain is equal to sale price less cost price. This is your capital gain. आपने कितने में लिया था? Yes, correct. Vinod, it is correct what you are saying. Capital appreciation means if I have purchased for 150 rupees and I have purchased for 100 rupees, that is my cost, and I have sold for 150 rupees, that is the sale price. Now the difference that I am getting, it is called as the capital gain. Okay. This must have happened with you in normal life as well. Suppose your father purchased a land for 5 lakh rupees in 2005. Now that land has a valuation of, let's say, 1 crore rupees, correct? So the difference is your capital gain. There is another concept in that, but we will come on to later. I want to make things simple for you. So let's say this is the capital gain. Fine. Now this capital gain is taxed in two ways in income tax. Let's see how. It depends. If you have kept the security, that is debenture, for less than 3 years. For example, assume if you have kept the security, that is debenture, for less than 3 years versus you have kept it for more than 3 years. Now this is a very crucial point. Please be with me on it, because if you are able to understand this, then you are going to understand the change as well. We will not have to spend much amount of time over there. If you have kept the security, that is debenture, for a period of less than 3 years, that means I purchased it, let's say in the year 2022, and I now want to sell this debenture, correct? So whatever gain that is going to come to me, that will be called as the short term capital gain. Why? Because I have kept the security for the short period. Next, if I have kept the security for more than 3 years, suppose I have purchased this particular security in 2019, fine, and today I want to sell it. So whatever gain that is going to occur to me will be taxed and will be called as long-term capital gain. Now quickly tell me, till this point, if anyone is having any kind of doubt, fine, tell me quickly, so that we can move on. We have to cover so many topics, and we are just on the first one. Is it clear? LTCG, STCG. STCG is short term capital gain, LTCG is long term capital gain. Okay, I'll just repeat it once again. See, understand this, debenture is an asset. Debenture is an asset. If you have purchased it, suppose I have purchased it in the year 2022 and now I am going to sell it in the year 2023. So for how many years I have kept it? Just 1 year. So any gain that is going to occur to me will be called as short term capital gain. Fine. And if I have kept the security, all the debenture for more than 3 years, that means I have purchased in the year 2019 and today I want to sell it in the 2023, then any gain which is going to occur to me will be called as the long term capital gain. Fine. What is gain to me? If I have purchased this pen for 50 rupees, correct, and I am going to sell it for 150 rupees, then the difference of 100 rupees is gain for me, correct. Now I am sure that you are clear till this particular point that what is capital gain and what is called as short term capital gain and long term capital gain. Now let's see the taxation, how government taxes it. So government says if you have sold any asset and you have incurred short term capital gain on it, then in that particular case this income will be included in your total income, in your total income, and it will be taxed. Now this is very important provision. How we are going to tax it? We are going to tax it on the basis of slab rate. What is slab rate? Your short-term capital gain on any asset is going to be taxed on slab rate. Now what is this slab rate? Slab rate is, every year you must have seen in the budget proposals, government says that if you are going to have income between 0 to 5 lakh, then this is the exemption limit. If you are going to have income between 5 to let's say 10 lakhs, then let's say 10% is the taxation. If you are going to have income from 10 to 20 lakhs, then 20% is the tax. If you are going to have income above than 20 lakhs, then your tax rate is 30%. Have you seen such kind of slabs? Now it has been converted into 3 lakhs in the budget provisions. Yes. Now this slab rate has been changed and now we have a slab rate that is differentiating in every 3 lakhs that we have already covered in the budget lecture. This was just the example. So this is called as slab rate. If you are having any particular short-term capital gain, that will be taxed on slab rate. But how do we tax long-term capital gain? So here, listen to me very carefully. Government says that if you have sold any asset and you have kept that asset for more than 3 years, you are incurring a gain on it, correct? That will be called as long term capital gain, and this gain we are going to charge tax of 20% on this. This is separate. This tax is not going to be charged on the slab rate basis. We are going to apply 20% tax rate on such kind of long-term capital gain. Are you clear till this particular point? Is everyone on the same page? Have we understood this concept of long-term capital gain, short-term capital gain, and how they are going to be taxed? Quickly tell me yes or no so that I can move forward. Okay, others are keeping it a mum, so I'll assume that yes. Now please see what is the change. And one more thing, this was about gain, but we forgot about interest income. You also might be getting a half yearly or yearly interest on your debentures, right? So this is also taxed as per slab rate. Now I am going to tell you what government has changed over here, and this is so simple. So just one explanation and then you will be clear which amount, which pen we should be using. Let's use this. So government has said that this provision is now no longer applicable. Correct? Government has said that this provision is no longer applicable. If you are a debt related mutual funds, that means you invest in debt related securities, then any long term capital gain that you might be having, any long term capital gain that you might be incurring will also be taxed on slab rate. मतलब अब सब भी एक तरीके से टैक्स किए जाएंगे. Now every kind of income will be taxed in the same basis. If you are having interest income, slab rate basis. If you are having short term capital gain, slab rate basis. That means your income is going to be included in the total income. Fine. And then we are going to apply slab rate on that. Fine. If there is long term capital gain that you are incurring, even in that we are going to apply slab rate. Earlier the provision was 20%. Is it clear? Is it clear to everyone? This has been the change. This short thing was the change, and for that I had to explain everything related to your what is capital gain, how they are taxed, etc, etc. This is the change that has been brought in the mutual funds. So now let's see what is the change over here. Under the new amendment, capital gains which are arising from the debt related mutual funds will no longer be classified as long term capital gains, but instead as short term capital gains. Means whatever is your period of holding, correct, whatever is your period of holding, we are not concerned with that. You are keeping it for 3 years, okay. Keeping it for less than 3 years, then also okay. Keeping it for more than 3 years, okay. We are going to charge it on the slab rate basis only. There will be no taxation by multiplying it with the 20%. This is what the meaning of this particular provision. If there is any gain that is arising from the debt related mutual funds, it will be added to the investors taxable income and it will be taxed at the investors slab rate basis. Fine. Yes, in debt related mutual funds, whether you are incurring interest income, whether you are incurring STCG, LTCG, everything will be taxed on slab rate basis. This is what I wanted to convey. Now everyone who has invested till 31st March 2023, they are going to be in the old regime. That means if they are going to incur LTCG, then 20% tax will be applicable. This particular scheme is, this particular change will be applicable on the investments made on or after April 1st, 2023. Obviously, we are talking about the coming year. We are implementing these changes for the coming year. That's why it looks like this. Fine. Now, one more thing. The similar kind of change, mutual funds with less than 35% invested in equities, they are also proposed to be treated as short term, and indexation benefits available to such funds may be removed prospectively. Indexation benefits will be removed. That means what? Simply it means that now there will be no longer treatment as a long term capital gain. We are going to treat it in a short term form only. Yes, it is applicable on debt mutual funds as well as the mutual funds who are having less than 30% investment in equities. For both of them, this particular change has been introduced. Now, after reading this, I have also included a slide on the current situation so that whenever you are reading it, when you are revising it, you will be able to know this. So, current situation is that if debt fund is held for more than 3 years period, then investor pays long term capital gain tax at 20%. Okay, short term capital gain from debt funds, however, is currently taxed as an individual slab rate. We have already talked about it, we have already understood about it. Now moving to the next change that we are seeing in the securities transaction tax. First we are going to see that what is the meaning of securities transaction tax, because all of you are students of SEBI or RBI. I hope and I wish that you are aware about this particular term, securities transaction tax. If you are doing trading in the capital market, then this is the tax you need to pay on your transactions, right? This might you might have seen in your study material quite frequently. Security transaction tax, it is similar to tax collected at source, but we are going to talk about tax collected at source as well. But first let's see, just wait for a second. Yes, this is a form of direct tax, correct, which is applicable on the purchase of securities that are listed on the stock exchanges in India. If you are doing a transaction in the stock exchange, you have got to pay this particular tax. Like whenever we purchase or sell land, at that particular time we have to pay the stamp duty, right? These are the taxes that government collects if you are doing such kind of tradings. So hence it is a direct tax. What is TCS? So first tell me, do you guys know what is TCS? What is the work that it performs? Any knowledge about TCS? TCS, I'm not talking about the company, I'm talking about the taxation provision. Quickly tell me, because we have to understand TCS as well, so it would be easy for me if you already understand about it. So STT is governed by the Securities Transaction Tax Act. When an investor buys or sells shares on the stock market, he needs to pay the securities transaction tax. This is the provision. I hope you have understood the basic. This was the basic part that I have included to tell you that what we are going to talk about. Now we are going to see what has been the changes. See, this is the change that we should be talking about. This has been the proposal brought in. So there are two terms called as the one term actually called as derivatives. There are derivatives contract in the financial market. Fine. So all those who have taken finance classes, they must be understanding that what kind of derivatives I am talking about. Derivatives are the financial contracts whose value depends on any particular underlying asset. Fine. I repeat myself, derivative is a financial contract whose value depends on any other asset. There are various components of derivatives, there are types of derivatives, and the two types are options as well as the futures contract. Right? Options as futures contract. I don't know what kind of depth of understanding you might be having about options and futures, but let me tell you about these contracts in very brief terms and in a very simple terms. You can have understanding about them later on. See, options and futures, these kinds of contract, they are a form of derivative contract. Like for example, I'll tell you an example. Suppose there is a company, let's say there is a company called ABC. This particular company is into manufacturing of atta. Okay, this company is into manufacturing of atta, and for manufacturing it needs wheat, right? So but it does not needs the wheat right now. It need wheat quantity, let's say 1000 quintals of wheat after 3 months. Because it does not need the wheat currently, what is going to do? It is going to enter into future contract. It is going to enter into a futures contract where there will be a seller as well as the buyer. Buyer is going to say that I need 1000 quintals of wheat after 3 months of time at this particular price. Seller is going to say that yes, fine, I am going to deliver you after 3 months this particular quantity of wheat at this particular price. So these are called as the futures contract. There is also variant of derivative called as options. Fine. So here there are two kinds of option. One is called as the call option. Next one is called as the put option. Call option means right to buy. Similar kind of nature, but it gives, suppose I have purchased call option. I know it is a little bit tricky, but what you can understand is, yes, what you can understand by this is that these are financial contracts which talks about future. These contracts, they do not settle today, they settle in the future period. Regarding options, we have two kinds of option called as call option, that gives you right to buy something after a specific period of time. This is right to buy. There is no compulsion. If you want to deny, then you can deny as well. And here you also have that is called as the put option. Put option means right to sell. Right to sell. Fine. Here, if you want to sell, then you can. Otherwise, there is no. Yes. Otherwise there is no compulsion onto you. So yes, these are some what you can say difficult terms. You can refer to these terms later on. Right now you can just understand that these are a kind of future related contract which do not settle today and they are traded on the stock exchange. Fine. So security transaction tax has been raised onto them. For options contract, this is the rate right now. Correct? And for the futures contract, this is the rate for securities transaction tax. Whatever is your value of the contract, your turnover of the contract, onto that this percentage will be applicable, and this is the tax that you are going to pay if you are going to trade on the stock exchange. So these are the two important things that you can remember. These have been the tax related changes. Security transaction tax has been upgraded only for options and for futures. I have mentioned the tax rates as well. You can refer them. Now next is TCS on the foreign tours. See, first of all, I would like to tell you one thing. In India, we all know that there are so many people in the income tax brackets. Fine, there are so many people. But still, many people do not pay income tax. They try to avoid it. And at the end of the day, government depends on your declaration. If obviously you have done such a one huge transaction in your bank account, and nowadays because everything is digital, government can trace your transaction history. If government finds anything unusual, then obviously government is going to launch a scrutiny against you. But otherwise, government does not know that how much quantity of cash you handle. So government depends on you that you are going to declare your income by yourself. But still, government does not get enough tax revenues. So government has come up with the innovative solutions. What are these solutions? So there are two solutions that the government has. Now what are these? Let's understand this. So one is the TDS and the other one is TCS. TDS means tax deducted at source, and these are deducted during the time of payment. I'll tell you the example as well. And TCS is tax collected at source, and this is deducted at the time of sales. For example, let's say in case of TDS, my employer, I am right now in the job. Fine. my employer knows that the salary which I am getting is above the income tax exemption limit. That means I need to pay tax. So government says to my employer that, dear company, before you are making any payment to this employee, please deduct tax. पहले ही deduct कर लो. Before making payment, you have to deduct and deposit to us. Government says, I am repeating it again, government says to the employer that before making any payment to this particular employee, please deduct tax beforehand and deposit it to us. Now I will go to the government and I will say that I do not want that you should deduct my tax because I am still not having enough income. I have done these kinds of investment and my income is now falling below the exemption limit. So government will say that yes, we have deducted your tax, but you can take it back when you are going to file the return. जब आप अपनी इनकम टैक्स रिटर्न फाइल करें, उस टाइम आप देख लें कि अगर आपकी इनकम एग्जेम्पशन से कम है, ठीक है, if you are not liable to pay income tax, then we are going to refund whatever tax we have deducted. This is called as TDS. And then we have TCS. TCS is deducted at the time of sales. Who deducts it? Seller deducts. So a person who's selling a particular item, he is instructed by the government to deduct TCS on that transaction of sales. Now your question should be that, is TCS deducted on every transaction of sale? So the answer is no. Only there are limited set of transactions for that TCS is instructed to be deducted by the seller. Are you guys clear with the explanation of TDS and TCS? There is much more to it, but I do not want to bring it over here. I just want you to have a functional understanding that what does TCS and TDS means. Is it clear? What about others? At least say yes. How much time it takes for you to say yes? If you have understood it, please say yes. Otherwise, I'm going to explain it more. So in case of foreign tours, what was happening was that certain people, they used to pay by credit cards, by using credit cards, right? So it was hampering government's collection of TCS. So now government has instructed RBI that they should devise a mechanism where now RBI has to take care that even while doing payment through the credit card, TCS should be deducted, right? If you are doing any kind of foreign tours, etc. Why government is deducting that? So answer is, there is a system called as the liberalized remittances scheme. Now let's talk about it. What does liberalized remittances scheme tells? This scheme is brought out by the RBI. Now, why RBI has brought it out, I'll tell you. I'm sure that you might have studied as well, but I'll tell you why the government does like this. See, foreign exchange is very precious to us. The dollar, euros, yen, etc., whatever comes to us, it is very precious. This is kept in our foreign currency exchange. We use it for doing the imports. So we do not want that our citizens are going abroad and they are just wasting this precious foreign exchange of ours. So government, or I'll say the RBI, has imposed some limits onto it. This is called as the LRS, Liberalized Remittances Scheme. Under that, LRS permits the Indians, they can freely remit. That means आप बाहर, abroad payment कर सकते हो. You can make the payment abroad up to $2,50,000, right? $250,000, this is the maximum amount that you can do payment under the liberalized remittances scheme. What if you want to do the payment above than that? You can do, but you have to take the prior approval of RBI. Fine. Any remittances exceeding this particular limit will require the prior approval from the RBI. What is TCS? So I have included few things about TCS as well. See over here, TCS is an income tax which is collected by the seller from the buyer, but only on specified goods. All transactions of buy and sale, they do not collect TCS. So I want you to remember this as well. Fine. Now once we have understood it, now we are going to talk about the provisions that has been changed. So under this, there has been a passing mention. What is the passing mention? Credit card payments for foreign travel, they are going to be brought under the liberalized remittances scheme of RBI to ensure that such expenses do not escape the TCS. In the Union Budget 2023, that means the current budget that we have, it has proposed a TCS for foreign outward remittances under LRS other than for education and medicinal purposes. You can do the remittances for the education and medicinal purpose. On that we are not going to deduct TCS. But अगर आप घूमने जा रहे हो ऐसे ही बिना एजुकेशन बिना मेडिकल पर्पस के, then the seller or whosoever is arranging your travel has to deduct 20% of the tax. It is applicable from the July 1, 2023 onwards, and government has instructed the RBI also that even if these transactions are happening through credit cards, please devise a mechanism so that we can capture TCS over there. I hope we have understood this. If this is being understood for all those people who are preparing for IFSCA examination, this amendment can be crucial for them. So there are so many benefits that has been provided under in the gift city, right? Gift city, it has been, this is a cess that has been made in the Gujarat, right? Why? That we want to promote the international financial services. We want to make it gift city as a hub of international financial services, right? So with that, there has been some changes. Now let's see why these changes have occurred. I'll tell you the logic also. If you are going to provide tax exemptions to the non-residents, then they are going to be attracted more towards the gift city. So this is the logic for that government is providing the tax exemptions to the non-residents who are investing in the gift city. So the amendments proposes that income which is received by non-residents from the portfolio of securities in the account maintained by offshore banking unit in IFSC, they will be exempt. Now what is the exemption criteria? Finance bill has exempted 100% tax holiday to the non-residents for such income for a full 10-year period. You have maintained some securities. Yes, so this is how, see, in the transaction of your TDS and TCS, government is saying that please collect the tax there on itself. You have to apply such kind of taxes so that these taxes can be given to us. And the rates etc. they differ depending on the transaction, what is the transaction type etc. Right? Now let's see over here, finance bill, they have extended the 100% tax holiday. If you are a non-resident, you have kept some securities in the banking units of IFSC, that means the banks of IFSC, and you are earning some income onto it, then such income is 100% exempt. For what kind of period, which period? So for total 10-year period. Apart from that, there is also one small amendment. I wanted to skip it, but we can read about it, right? It is just a small amendment. So it has introduced a beneficial withholding tax rate of 10% under section 115A for dividends which has been received by non-residents from IFSC. So please understand this in such a way. This particular section is for Income Tax Act. This section says that if non-residents are receiving any kind of income from India, then again residents should deduct the tax, and after that they should pass on to the non-residents. So this particular tax rate has been brought down to 10%. If non-residents are receiving dividends from the IFSC, then the tax rate is going to be 10%. This was just a small amendment that we should have talked about. Now next is royalty. I hope you all know what does royalty means. If you have invented something, right, you have made a payment, you have done some invention, and you are receiving royalty on account of it. Suppose I have done some invention, I have a patent on it, but I have given the rights to some other person, that particular other person can do production onto it, and he is going to give me a fee for providing the know-how, that is called as the royalty. So any kind government has hiked the tax related on the royalty as well as the fee from technical services that has been earned by the non-residents. So if non-residents are earning such kind of royalties as well as fees from technical services from India, then now the taxation rate is from 10% to the 20%. This is the another tax related provision that has been made. Earlier, both domestic transactions of royalty as well as international, that means non-residence related transactions, they were on the parity. Both of them were charged at the 10%, but now this has been changed. So this was a slight different provision that we have encountered. Now next important change that has been brought, or not a change, but this is the recommendation, Committee on the Pension System. So I would like to give you a brief on it. India was, before 2004, India was having the old pension scheme called as OPS, and from 2004 onwards, government brought NPS, that is National Pension Scheme. Under old pension scheme, I hope that if any one of your acquaintances, they have been in the government services, then you might relate with it, that at that particular time, if suppose the person has retired, at the time of retirement he was having a salary of 1 lakh rupees. Okay, so now his pension amount is going to be 50%, 50,000 rupees. If there are new pay commissions that will come, then his pension amount is also going to increase. That was the case with OPS, old pension scheme. Correct? This is non-sustainable. Why? Because the person who's getting the pension, he did not contribute anything from his salary. So this was a total burden on the government. But under National Pension Scheme, this was a contributory scheme. That means government said, you also contribute, we are also going to contribute. Fine. And that is how we are going to develop the pension fund. Right? So this was new pension scheme, but some states have not agreed with it. So for that, now government is saying that we are going to develop, we are going to formulate a committee under the chairmanship of the Finance Secretary TV Somnathan. He is going to read this particular pension scheme, and he is going to suggest the some changes whatever is required. Once these changes are recommended, then central as well as state government both are going to follow this. And I have given some provisions for the related to NPS also. NPS was implemented from the year 2004, right? Most of the states and UT government have notified this. As per the data given by the PFRDA, 26 states, and there the exceptional states of Tamil Nadu and West Bengal has also been provided. These states have not followed. Apart from that, other states have followed. So this was the change. Government has recommended that this committee will be formed. And lastly, very important provision called as the relief in income tax. So if you have studied my budget related provision or the budget related discussion that we were having on, under this budget, this has been said that any person who is having income up to 7 lakh, if you are having income up to 7 lakh, then you are having zero taxation liability, because you will get the rebate between 5 lakhs and 7 lakhs income. You are going to get the rebate for it, and there will be no taxation. But there there is a, what you can say, it is a technical thing, that if even if your income becomes 7 lakh 100, that means even if your income is more than 100 rupees. From 7 lakh 100. In that case, from zero taxation, now you have to pay the tax of 25,000. Can you tell me why? Because the exemption, the rebate that was available to you when you were having income below 7 lakh will be taken away, and your income tax will be calculated on all the income, and you have to pay tax of 25,000. Here in this case, the tax will be applicable 25,000 rupees. See, income increased just by 100 rupees, but the tax increased till 25,000. So this was a problematic thing that was identified by the finance ministry, and then government said that if you are having income more than 7 lakh, correct? That means suppose if there is one person and he has got the income of 7 lakh 900. So in this case, your tax cannot exceed the income over 7 lakh. That means your tax will be 900 rupees. सिर्फ इतनी ही तो इनकम बढ़ रही है, correct? So this is what government has said. Now if this is a technical thing, what you have to remember is, if your income has increased above than 7 lakh, then your tax amount that you are going to pay cannot exceed the income which has increased above the 7 lakh. And by doing all the mathematical calculations, there is a figure. What is that figure? See. So this is the calculative figure. If anyone who's having the income up to 7,27,700, that person can take the benefit of this provision called as the marginal relief. You are going to get the provision by reading it. So marginal relief is proposed so that tax on whatever tax one person is paying, it should not be more than the income that is exceeding 7 lakh rupees. Fine. So this was the marginal relief provision that was introduced in our finance bill related changes. With that, we have covered all the important changes that were there in the finance bill. I hope you must have understood. If you guys have any sort of problem, then you can feel free to ask. You can write in the comment section. You can write us on our official email ID. We will be happy to answer those. So with that, thank you so much for joining in. If you enjoyed this lecture, then please do not forget to give us a thumbs up and have a good night.